The markets looked all red globally speaking, so all green globally speaking, so things are looking quite positive. What's boosted the markets after the performance of last week?
We've seen some weakness on worries about two things: overvaluation and also whether the global economy is actually picking up.
Right.
And what's happened is that Larry Summers, who is the most senior advisor to Mr. Obama on economics, has come out with quite a strong statement saying, you know, the worst of the crisis behind us, growth will resume, there's enough stimulus in the economy. So actually a very strong statement about, positive statement about growth in the US economy.
Right, what we saw with the Dow Jones index yesterday is that it was about 29 points ahead. I mean, it's a modest figure, but we're anticipating some kind of indication of the state of the American financial system tomorrow as the earnings season begins.
Earnings season, always very, very important in the US. And what's happening now, of course, is that the numbers we see now would be the numbers for the third quarter.
Right.
So in essence, it would be a fairly recent update of what's been happening in the US economy, and we'll get an indication of whether the economy actually grew during that quarter, because the expectations are that we'll actually see small positive growth in the US economy for the third quarter.
What do you think we're going to see? I mean, I'm now asking you to look into your crystal ball. We saw Goldman Sachs doing fairly well yesterday in New York, so some sort of indications of recovery within the banking sector. We know that factory numbers are up, but we still know that unemployment is at its worst level in 26 years. So how do we reconcile all these elements?
Well, the first thing that you have to understand about unemployment is that although a lot of people are focused on unemployment and saying that we can't really recover without unemployment, unemployment is a lagging indicator. So unemployment doesn't recover, or employment doesn't recover until the economy has been growing for a quarter or two. So we don't really expect to see, even though we expect to see economic growth starting to recover from the third quarter onwards, we don't really expect to see employment recovering. But still, whenever the employment numbers come out and they're weak, it does actually pull the market back, because there's such a strong focus on employment. But what it does also indicate is that the Federal Reserve is unlikely to start tightening policy until we see a turnaround in the unemployment numbers. So we likely, even though the economy starts growing, we're likely to still see this very strong monetary impetus from the Fed until sometime in early next year at least.
I mean, we'd seen equities, although there's been a rally in equities, but we'd seen people preferring to go to Europe, to Asia, moving out of the United States. It's put a lot of pressure on the dollar in recent months. What do you think it's going to tell us in terms of which sectors are performing in the US as we await these earnings reports?
Well, what we actually do need to see, and one of the things that came out of Goldman Sachs yesterday was quite a positive report about the banking sector as a whole. So Goldman Sachs saying the banks are actually quite healthy and growing, which was the original cause of the problems that we're in now. So at least part of what we need to see recovery is in place. But what we're likely to see going forward over the next couple of years, not necessarily the next couple of quarters, is that the US needs to grow in a much more balanced way, which means that there needs to be much more production of tradable goods in the United States, and much less focus on the property sector and on local consumption.
Let's bring issues back home. The JSE was about 142 points higher yesterday. It's boosted by resources. The gold miners are up, the platinum producers are up, and the rand is just slightly stronger than what it was a few days ago. Is that because of news from a German automaker?
I think that it helped. It's not a huge amount of money in the overall scheme of things. So the Barty deal, for instance, much larger than the BMW deal. But this is exactly what we need. We need foreign companies with strong brands to come in and use South Africa as a production platform for exports, because this is exactly what's happening in terms of the BMW 3 Series. Roughly 25% of BMW 3 Series manufactured in South Africa, exported to the United States, all over the world. So exactly the kind of thing that you need: new technology, production in South Africa, employment, fantastic news.
Okay, so 2.2 billion coming in from BMW, and also talks of a merger between AngloGold Ashanti and De Beers. AngloGold says that they have something like $15 million to play around with. De Beers really needs that kind of investment.
De Beers is cash strapped to some extent, because what has happened is that De Beers has stopped production of diamonds in many places, and the diamond market is still extremely weak, and we don't really expect to see a very strong recovery because it's very US orientated, US consumption not likely to pick up. So De Beers actually needs to find new markets, but it also needs cash to be able to maintain the lower production. So it's interesting that although De Beers is now very much in the Oppenheimer fold and AngloGold Ashanti has moved away from the Anglos, there's now the tie-up. And both of them actually have very strong African presences, so to some extent
but the synergy of the two coming together?
Well, like I say, they both have quite a lot of African operations, but I think the main synergy is cash at this point rather than any operational issues.
People will be asking, is this time to be going into diamonds?
Well, it is a time for AngloGold Ashanti to be buying into diamonds. It's a good time because you always need to go in whenever it's weakest. For De Beers to take on new shareholders at this point, though, maybe not such a good deal on the De Beers side.
Blue Financial Services, apparently shares had fallen 13% amid rumours of problems in their financial reporting and other allegations around business practices not being quite the best practice.
Well, what you're seeing is Blue is one of the stronger Altex listings, and what you're seeing is that the smaller companies that is recently listed are coming under pressure because of the worldwide recession, etc. And as soon as you actually put pressure on these things, these companies haven't been around all that long. They are still run by the founding entrepreneurs, etc. So sometimes the financial dealings can come under pressure. And what happened there is that there seems to be one of the directors who had a single stock future exposure, which he was forced to cover, which means that quite a lot of shares have come onto the market from the directors, and that's never a really good sign.
I mean, this also comes on the back of reports last week of problems at African Dawn, which is another micro lender, and 3 executives there actually being fired. I mean, although the cases are separate and should be looked at in their respective merits, do you think that micro lenders are going to be having problems in this current environment?
I mean, micro lenders are a form of bank, and all the banks are having problems, so the micro lenders shouldn't really be an exception to that rule, although what we have seen is that a lot of the micro lenders listed in South Africa have moved into the African continent very strongly and applied practices that they've been honing in South Africa for quite a while into Africa. So it's actually stayed quite strong up to now, but there does now seem to be some pressure on the micro lenders as well.
Right, and a final business story, Fin24 yesterday was reporting that SAPI is delisting from the London Stock Exchange by November 2nd. I think they'll be closing their register. They still have securities in New York, but slimming down, cutting down the cost base, saying it's more effective to be trading on the JSE. What do you think is going on there?
Well, I think that their statement pretty much says it all. There's so little trade in London in SAPI shares that it doesn't really make sense for them to actually be listed there, and it actually costs quite a lot of money to stay listed in London. But again, actually a positive for South Africa, because it says, you know what, being listed in South Africa is good enough for SAPI.